All right. Okay. Good. Good evening. Welcome back for the new week. Okay. So again, for those of you who are new, first time joining in, would like to extend that welcome. For those of you who have been with us for some time, I think you know roughly what we're gonna do. Okay. So for the benefit for those of you who are joining in first time, okay. What we do over here on a weekly Monday session is to go through, what are some of the things that have happened in the past week. What are some of the things to take note of for this week? And then we'll look into some of those charts to share with you my personal opinion, my analysis, where are some of the opportunities to be focusing on. And then very quickly we'll have some little time for Q&A as well, and then we'll wrap up the session by sharing with you some of these upcoming events that we have as well. Okay, so whether is it offline or online, we do have a mix of that. And of course, if you're available, okay, that's where we strongly encourage you to join us in some of these events here as well. Okay. So before we kickstart the entire session for today, just want a very quick disclaimer over here. Okay, that today's session and the sharing as well as the ideas and content are mainly for educational purposes, right? So if let's say we talk about some live examples, some trading opportunities, just make sure that if you want to execute them, you're aware of the risk involved, okay? And they are not meant to be trade or investment advice, right? So do have that in mind. Okay, so as I mentioned just now, this is what we're gonna do on a regular weekly session. Okay, so every Monday, same timing, except for next week, right? Because next week, we are celebrating the Lunar New Year, or we call the Chinese New Year. And Monday is actually the second day of the CNY period. Okay, so next Monday will not have a session. But other than that, we run it on a regular basis every Monday. This particular time, we're gonna get started. Okay. Good. So just like I mentioned, right, we'll quickly summarize what has happened last week, what we look into this week, the technical charts and opportunities for the week, and then we'll end off with Q&A as well as to wrap up the session by sharing with you some of the events. Okay. So with that said, let me go over to Forex Factory. Okay, to kind of show you very quickly what has happened last week. In fact, one of the most important data was released last Thursday. Okay, which is the CPI year on year, and you can see over here, essentially it came out at 6.5, which is in line with the general consensus and expectation, but that kind of sent the dollar weaker, or say send the dollar down, simply because right now, with inflation rate starting to drop, there are less pressure on the Fed to continue being so aggressive in hiking, and that actually start to the market, right, would start to price in the fact that, oh, the Fed may not be so aggressive, let's take some profits off the dollar, let's sell the dollar for potential reversal and things like that. Okay, so that's what we're likely going to continue to see. I do personally expect the inflation rate to continue to drop. Okay, and personally I do expect the Fed to maybe raise rates by another 2 times. And very likely that's going to be the peak of interest rate, maybe about 5%. Okay, so now it's about 4.5. Maybe it's going to raise to like 0.25, 0.25, or maybe 0.5, 0.25. Maybe raising it to about 5 to 5.25%. And that's likely going to be the peak of interest rate. Okay, and later part of the year, there's a very good chance the Fed is going to start talking about potential rate cuts. And that's going to be bearish for the dollar. Which will continue likely see the dollar weaken, right, for the second half of the year. So this year is kind of very, very interesting and unique for the FX market, okay? In fact, I would say if you have started trading the currency market since 2019, right, that's where if you get started on 2019, you get exposed to FX market. In this very short, like 3 years to 4 years, you actually observe quite a lot of fundamental aspect of the FX market, right? Which is kind of condensed because you don't really see that happening in such a short period of time. Okay, but in 2019 to 2020, we kind of had the COVID. You see the Fed cuts rate very, very aggressive, very quickly. You can't experience the bearishness of the dollar. And then in 2021, at the end of 2021, going into 2022, then we talk about inflation, and then you see the Fed hike rate very aggressively. So you kind of see that full cycle, right? And then of course, this year potentially in the second half, we're gonna start talking about rate cuts again, right? So you kind of see that cycle up and down. Okay, so it's actually a very good period. Yes, it's gonna be very volatile, but it's actually a very good period for many traders to kind of experience that in a fairly short period of time. Okay, because typically you don't see such a fundamental shift. From cutting rates to hiking rates to potentially cutting rates in a short period of time. Okay, but we are probably looking at that right now. So this is kind of what we call a condensed version of learning. Okay, so if you look at this week's event, generally it's not that significant as compared to like last week's CPI. Today we have the US bank holiday, so we don't expect much movement for now. Later about a week on Wednesday, we have the core PPI, core retail sales coming in. I don't think that's going to be like huge market mover, but definitely you want to pay a little bit of attention on that as well, because a great, or we say a very big deviation from what was expected might still create that kind of volatility in the market. Okay, but to be honest, other than that, that's really nothing much for this week. Okay, in fact, that's generally for the entire. Oh, sorry, I think I filter off. That's why I was like, hey, how come only all the US? Okay, my mistake. Okay, again, if you look back here, because I was looking at BOJ and I was like, hey, it shouldn't be this week. So great. So we do have the BOJ coming in on Wednesday as well. I think Bank of Japan is something that you want to keep an eye on as well, okay? Because I think last weekend I share about there's a good chance that this year we're gonna see that divergence in policy from a fundamental point of view, and likely what we can see is the Fed might start to talk about cutting rates soon, maybe later part of this year. But Bank of Japan are very early at its hiking process, okay? So that's what we call policy differential, policy divergence, and it might give you a very decent trend in the FX pair, right? So for example, like dollar yen, you might see a very nice trend. So Wednesday, BOJ news might create some volatility in the yen. Okay, so keep an eye on that. But of course, other than that, nothing much. Okay, so good. Hope that kind of covers the week in terms of some of the events to take note of, right? So with that said, let's go over to the charts over here. Let's kickstart with the dollar index DXY. Okay, so over here you can see dollar index has fallen, and then of course we kind of saw this little bit of the corrective move, and then we kind of anticipated that drop with the last week's CPI. We do get that very decent drop, and right now with after such a move, right, naturally the market will start to do a little bit of a retracement, so nothing surprising. Perhaps we are starting to see that retracement coming in. Okay, just one thing to note is that we do have a very, very small divergence here. Okay, but overall from this low to this low here, we don't really have a divergence, yeah? So take note that this little pullback may not be a very huge reversal, but it might just be a deeper pullback, perhaps something like that. Okay, coming back to retest this entire structure level. If this is going to be a very corrective move, then of course we're going to continue to expect more downside for the dollar index moving forward. Okay, so for me right now, overall direction is still bearish. We do expect a little bit of pullback. Okay, if the market kind of break above 102.65, then you can expect a deeper pullback. More importantly, it's not just where the market is moving, but I think the question is how the market is moving, right? So if this is going to pull back correctively, okay, we're just going to be patient and we're still going to be bearish on it. Okay, so if the dollar index is pulling back right now, that means it's kind of gaining back a little bit of a strength. Then of course some of this major will likely see that as well, right? So in terms of like euro dollar, after that rally, potentially we are seeing some kind of pullback. Okay, So that is actually quite nice for the euro dollar side as well, because if you can get a decent pullback, correctively towards this zone, around 1.0725 to 1.0680, I think that opens up a very nice little opportunity to look for a buy, because again we then have this confluence where the market broke that trend line and kind of retest that. Okay, so keep an eye on the euro dollar for the week. Okay, we want to see if this can come back down correctively. If it is, then we have a decent opportunity to look for more upside here. Okay, so just give it some time. Pound dollar over here, okay, it's not the best as of now, as of today. Okay, we're still holding a bullish perspective as a whole, but right now with today's market, you can see that if I put this in, we're seeing a little bit of a divergence build up. Okay, so what this means is that we might potentially see a deeper pullback. Maybe I'll put in a fit over here. We're likely gonna update this analysis for tomorrow too. Okay, so likely I'm gonna expect something like this. Okay, so areas to look out will be somewhere around 1.2065. We ideally want to see this come down correctively, right? It shouldn't be too fast, it shouldn't be too strong. The pullback should be gentle. If that happens, then of course we can expect more upside. We'll be looking for buy areas around 1.2065 to 1.2010 area. Okay, so that's on the pound dollar. Okay, so a couple of opportunities definitely on the radar. Aussie dollar over here, we have this little build up, but we don't really have a very obvious divergence. We have a bit, okay, with this top here, we have a little bit here, but the overall structure is pointing to a potential reversal, or at least a deeper pullback. Okay, so for now I'm maintaining a pretty neutral bias. I want to wait and see how the market is going to react from here, with some confirmation level around 6860, which means ideally I want to see a move down, kind of test this area, form a little bit of a pullback. If you can see something like this, you can expect more downside with 6630 as a target. Okay, so just give it some time on the Aussie, see how the market is going to develop. Key areas to watch is 6860. Okay, so this one a bit more of a patient. Okay, the dollar Canadian is likely gonna be choppy a bit. Okay, the pattern I'm observing here with a good possibility of developing is what we know as a expanding flat. So in terms of Elliott Wave, this is likely how it's going to develop. Okay, let me extend this a bit. So potentially this is how it's playing out. With this move down, this can be an A, B, C, a three-wave corrective pullback that looks something like that. This is what we call an expanding. What I like about this area here, of course, is we do have that structure overall. We have that 1618 FIB extension. If you put in a general horizontal line around that zone, you kind of see some areas of confluence too, right? The market actually reacted in the past there as well. So that gives us a very good chance to look for a potential sell if the market kind of come back towards this zone. And of course over here you can read up a little bit. Ideally, if this is going to develop in a very, very corrective manner in a lower time frame, okay, then of course we can look for the breakout and then stop above that. That will be a very decent risk to reward with a target at 3225 as well. Okay, so dollar CAD definitely I'm keeping a close watch. Okay, yeah. And then we have the dollar yen. Dollar yen has been very nice trade last week. If you managed to follow. Okay, I remember we shared this on the lower time frame on the H1. Back then we were talking about this. Okay, that was like last Monday. Okay, we mentioned about how the market, if it pulls back correctively, you want to look at this pattern here as an impulse correction, look for the sell with potential target 129.50, which is previous low, right? Can't break through entirely. But of course, if you manage to ride it, even as a breakout here or breakout here with a target here, I think it's a solid profit potential, right? So right now, my view on the dollar yen generally is still bearish. I don't think there's a reason to be buying as of now. But of course, selling it at this price point at this particular time is not the best, right? Because again, generally what the market is going to develop is after a push down, you want to be patient, wait for a pullback. Okay, you want to wait for the market to at least develop into a corrective structure that looks something like that, then you sell it again, right? So something like this, you want to see something like this is good, or even on a bigger scale, it looks something like that, right? So that's what we meant by corrective pattern. Okay, so wait for it. You might get it maybe end of the week or maybe next week, early next week. Okay, so just be patient, wait for the clear setup to come to you. Right, so that's on the dollar yen side of things. Do take note that on Wednesday we have the Bank of Japan news as well, right? So that can create some volatility in the yen. If you're news trading, you might want to also factor that a potential opportunity to maybe trade a breakout. Okay, if you get a setup in line with the news. The only challenging part about Bank of Japan is that you look at this, it doesn't really tell you the time, right? And it's a bit difficult to do news trading if you can't prepare the specific time for it. Okay? You never know when the news is going to release and then suddenly it just pop, right? And then the yen pair just start moving. That's how the yen is, okay? So it's a bit tough to kind of prepare for it because you have no specific time. Okay, yeah. Gold over here, we have been sharing to be cautious on buying. Yes, the market has been continuing moving higher. Of course, we did not capitalize on the upside for this period of time. But to me, I don't feel comfortable buying in this kind of structure. Okay, the reason is because this kind of structure out move, we don't have a decent pullback to really get involved in a trade, right? So that risk reward is not going to be very, very decent because you don't have a very clear ways of executing your entry and then putting a stop. But again, we are not here to kind of like trade every move in the market, right? So for me, I always say you need to have a very clear go-to setup. Okay, you need to be clear under what circumstances, what do you need to see, what condition, what criteria needs to be fulfilled before you get involved in the trade. Okay, so gold for me for the past 1 or 2 weeks, there's nothing. Okay, but I've been sharing that overall in the bigger scheme of things, I'm very bullish on gold. I have positions running earlier on GLD, which is the gold ETF. I'm still holding on to that. I'm not intending to cut that. Okay, of course it's in profit. I'm not intending to take profit out of that trade. But if you're looking to add on like me or even like doing some shorter terms in and out, now's not the best time to do it. Okay, and I just want to show you on a higher time frame perspective. Okay, we have been, I've done various workshops and sharing session in 2022. I think some of you joined, some of you participated in those workshops as well. We have been saying that how gold has a very good chance of reaching close to the previous high at 2075. We are almost there. Okay, halfway. Earlier in 2022 last year, we did some various sharing when gold was still trading somewhere there. So to me, that's almost halfway there, right? Don't feel that you have missed out on the opportunity. Don't be FOMO, which is fear of missing out. Because looking at the longer and bigger picture perspective, okay, while we are targeting this previous high at $2,075, there's a very good chance gold will break out of that level and continue to go higher. Okay, and when it breaks that, it's going to be an all-time high price point, okay, which means you don't have previous prices of reference. There's a good possibility we're just going to see gold rally. Okay, so I've also shared that moving forward, right, this year onwards, there's a very good chance that commodities like gold and silver, even like some of the agricultural commodities, are going to be the focus. Okay, so gold definitely has a lot of upside potential. You don't need to rush in. The key here is wait for your setup to come to you, right? So for me, what's my setup? Definitely not a pattern like that. I would want to see at least a very, very decent pullback. okay, before getting involved in the buy. Okay. So I'm very, very patient on that, right? Of course, I don't need to chase this. We just wait for the setup to come to us, okay? Don't sell it as well. I don't think there's any reason to be selling as of now, okay? If you want to sell, at least wait for a rejection, wait for a pullback, okay? And then, of course, in the short term, you can still sell this as it's coming down, as it's retracing, right? But not now. There's no setup to be selling. There's no reason to be selling, okay? So that's on gold. Let's talk about the equity side of things as well. I think this year, if you're looking at stock market, we had a pretty nice first half of the month, and it got started in a very, very good year. 22-3 started off great. Not only in the S&P and the US side, I think if you're looking at like China market, you know, it rallied quite a lot, simply because of the positivity of China opening up again. I just wrote an article, okay, just very, very quickly share with you about this as well, right? I just wrote an article published like just before this session over here, talking about how there's a good 87.5% probability for 2023 to be a bull year. Of course, where I pull this stats is not just like blindly taking out these numbers, but it's based on this thing called the 4-year cycle or the presidential cycle, okay, which we look at what we call seasonality over here, right? So there's a certain patterns that the market tends to follow, okay, and there's a good chance that this year 2023 is actually a solid year, right? Because based on this presidential cycle or 4-year cycle, 2023 is the third year, and third year tends to be very bullish within this stats. And of course, what we can also kind of confluence with that is if the Fed decides to move towards rate cut policy or easing policy this year, then of course that means that money is cheap, and the money will then flow into the equity side of things as well, and then it will push equities market up, right? So it kind of have multiple factors coming in together, right? So for me, I'm actually very, very optimistic on the equity side of things. But having said that, on a chart perspective, right, optimistic doesn't mean that every day it's just gonna go up, 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 and up. Okay, right now, from a technical point of view on S&P, you want to be observing how the market is going to react around this 618. And more importantly, I think, is the top of this structure trend line, right? So what is this trend line? Where did this trend line come from? Why is it so important? It's actually a daily trend line, okay, which is the daily top channel. You can see it has been rejecting for a good couple of times. Back then, when the market was here, okay, somewhere early December last year, I talk about how, you know, don't be too positive, and you want to observe. If the market cannot break through that top of the trend line, don't be so aggressive in buying, and then we can't get this drop, right? So same thing over here. As we are continue to see some positive sign as of now, as this continue to develop, this might, you know, continue to go higher, 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 higher. But if this comes out very, very correctively, kind of coming back to this top of the channel, we see a diagonal, we see a crawl, you put in your RSI, you see the divergence, which seems to be building up right now. Okay. If something like that develop, you want to be very careful. Okay. While we are talking about 2023 potentially being a good year for the equities market, we're still very early in 2023, right? So what can happen in the market is this can still come back down first, and, you know, maybe for the first month or first 2 months it can still come back down, and then for the remaining of the year it starts to rally, right? That can happen. So the beauty of looking at the markets in multiple perspectives, from macro, from seasonality, from fundamentals, to the technical side of things, it kind of give you different lenses, different perspective of market. So if you put them together, you can build a better trading plan, right? So for me, equities, just be careful, okay? Because depending on your approach as well, right? Are you trading it? Are you investing into it? Things like that. Okay, but for me, that's the outlook. Okay, this week here, likely we're gonna continue to see maybe a little bit more upside. If this develops into something like this, just be very careful. Okay, we might see that bigger drop first. Okay, yeah, so that's on S&P. I'll skip a couple of this here because of time. We're gonna talk about Bitcoin. If you're into the crypto space, I think last week was crazy. Crazy means we have like super huge upside. I still remember I was daily monitoring that, and then at one point in time Bitcoin was testing this previous high, and then suddenly it just break. um that move here, you can see, okay, it's about 15 to 16% upside, okay, give and take. It's huge, okay, in a fairly short period of time. I mean, it's crypto. You don't really see a lot of like 15-10% in a couple of days, right? But I think in crypto it's the norm. But just be careful if you are interested to buy, right? This is the chart of Bitcoin futures. We are testing the previous level around 21380. Naturally, I think the market will probably give a little bit of a reaction here. Seems like it's rejecting down. There's no reason to sell. Okay, there's no reason to sell, but again, buying here may not be the best time. Okay, you might want to wait for a little bit of a pullback. If you can get a corrective structure that looks something like that, then of course that would be a good buy setup. Okay, so the bias here is still bullish, especially with this momentum run. The only thing now is to just wait for a decent pullback. Okay, so that's the view on the entire crypto market as a whole, right? I'm just using Bitcoin to give you a bigger picture of crypto market itself. Personally, for me, I'm in AVAX, AX, as well as Litecoin. I'm in these two positions right now. Yeah, so for those of you just interested, I just thought of sharing that. Okay. Okay, yeah, so that's the overall view of some of these markets that we look into. Okay, so we talk about the majors, we talk about gold, we talk about S&P, as well as the Bitcoin side of things. Good. Okay. Hopefully so far so good. Yeah, so I'm seeing some questions and of course some comments over here. Right now, just for those of you who are fairly new, every Monday session we run two sites, right, concurrently. One is on Zoom, one is on my YouTube channel itself. Okay, but it's basically saying I'm monitoring both sides of things. So some comments I see coming in is sharing that dollar Canadian on the H1 seems to have a potential head and shoulder pattern. Okay, you might be talking about an inverse head and shoulder pattern, I believe. Perhaps something like that, right? So this is the inverse head and shoulder pattern, where this can then, of course, move higher if that's the case. I don't disagree, okay? That's a potential inverse head and shoulder pattern. But I always add on one thing called the context, right? So you want to look at like, where is this pattern happening? Okay, so in the higher time frame perspective, if this potential inverse head and shoulder pattern is developing at this low here, I'll be looking at a potential reversal. But if this head and shoulder pattern, or say inverse head and shoulder pattern, is happening at a midpoint of some key highs and lows, I wouldn't be too keen to look at that, but I would rather focus on the bigger time frame bias for now, which this can potentially still develop into something like this. Right, so that's the principle of context, which I also look into, right, where the pattern is developing. I think that's key. One of you is sharing COT data on is short on S&P. I'm not surprised. Yeah, I'm not surprised on that. The technical charts again, it's not like full on bullish momentum. So that's why I share you want to be cautious and keep an eye on how the market is going to develop around this area. Okay, so I'm not surprised that COT data on S&P is coming in short, right? So take note of that. Good. Okay, yeah. Hey, good. So Zoom side, I don't see any question as of now. Okay, so yeah, if you guys have like any questions, anything, just feel free to post it up. Okay, so good. So with that, I'll kind of cover the closing notes of today's session first. Okay, so over here, whoops. Oops. Okay. So over here, for those of you who are still not aware, basically this session, we're running both, right? Just like I mentioned, Zoom as well as on my YouTube channel. But basically this session is sponsored and hosted by Zenfinix, right? And everything trading over here that you see on the slide, is basically the education arm. Okay. So whether you're watching on Zoom, whether you're watching on YouTube, basically this session is hosted by Zenfinix. Okay. They can't sponsor this session, so every week we run it. And of course over here, there are some bonuses and offers from Zenfinix as well. Okay, so if let's say you would like to find a new brokers to be trading with, okay, or you would like to maybe diversify a little bit of your risk with various brokers, okay, one of the broker here you might want to find out a little bit more or even get in touch with would probably be Zenfinix. Okay, so if right now you're watching on YouTube, right, in the description box below I've actually put in a link that click, I say here, click here to WhatsApp. If you click that link, you'll not come to me. Okay, it's actually a WhatsApp link directly to Zenfinix support team. So if you have anything that you would like to find out a little bit more, inquiry about Zenfinix as a trading platform, just feel free to click onto that link. It will bring you to the support team. You can directly message them on WhatsApp. Okay, if you're watching on Zoom, same thing here. The link has been posted in the chat. Just click it. You'll be able to reach out to them, right? So that link doesn't reach me. Just want to clarify. It reached directly to the support team. So any questions you have regarding the broker, you'll be able to ask them directly. Okay, so for now, they are running this deposit bonus, right? So if you register an account, you do funding. Of course, you need to verify your account and then you do funding. If you fund in $100 deposit, you get an $88 credit. If you do a $200 deposit, you get $96 credit. And if you do a $500 deposit, you get an additional $140 of credit. Okay, so what is this credit? What does it mean? It means that now you have more margin that you can use to trade, right? So if you put in $100, you're gonna get 188 margin that you can actually use to trade. Okay, so of course, you can then potentially initiate a bigger position, and potentially if you make money, you can make more. Okay, so that's the idea of it. Okay. On top of that, together with Zenfinix, I run this Trading Those Telegram channel as well. And every day we're gonna post one chart, okay, to get you be updated of the market. And of course, it's free. Okay, so over here, if you would like to also join into this Telegram channel and then you get a chart a day, feel free to scan this QR code. Okay, it will lead you to the Telegram channel and then you just click join and then you'll be in. Right. And from time to time when we have some events, some updates, we also post up in the Telegram channel here so you can keep yourself updated on some of the events that Zenfinix is running. Okay, yeah. Last but not least, just to share with you some upcoming workshops that we have. These are physical workshops that we're running. Okay, so these are specifically in Malaysia, in KL and PJ. So of course, if you are from Malaysia, in Penang, in Johor, in Malacca, and you would like to join us, you can also travel to join us. Okay, but for now we are doing it in KL and PJ, and then in March, we do have plans to go to Penang. Okay, so for February, it's gonna be KL, PJ, and then March in Penang. So this one here, there will be 2 dates. Okay, 2 of these dates, we're gonna share the same content. Okay, obviously you can come for both days. Just want to highlight that it's gonna be the same content. Okay, so first one here is gonna be on the 11th of February. It's a Saturday. It's going to be afternoon 2:30 to 5 p.m. The venue over here is Red Curtain Event Space that's in KL. And then the other date that we're going to have is the 15th of February. It's going to be on a Wednesday weekday in the evening. Okay, 8 p.m. to 10:30. That's going to be at Armada Hotel in PJ. Now you need to register for this event. You need RSVP because there are limited seats. Again, how to register, how to RSVP, click on the WhatsApp link. Reach out to Zenfinix team and tell them, oh, I'm interested in this event. How can I register an RSVP for it? Okay. So these 2 events are free. which means you can come and join. You can learn more from this event. Okay, just know that of course this event is sponsored by Zenfinix too. Okay. Then we are also planning a full-on workshop. So this is a full-day workshop on Elliott Wave. Okay, so this is the primary technical analysis that I'm using to analyze the market, to trade, and then of course what you see on the daily market in terms of like what we do today are all based on the principle of Elliott Wave. Okay, so we are organizing this full-day training, full-day workshop on the 25th of February. Okay, the timing here is going to be 10 a.m. all the way until 6 p.m. If I'm not mistaken, Zenfinix told me that they are going to be providing lunch as well. Okay, so you don't need to worry about the meal. Okay, venue as of now is still not fully firm, but it's definitely going to be in KL and PJ area. Okay, now this masterclass, this workshop, if you want to register by yourself, I do have an online version. Okay, the retail price is obviously $497 US online, but for this particular day, okay, this particular workshop is going to be fully sponsored by Zenfinix. In other words, you don't need to pay $497 to actually attend. But the course is sponsored by Zenfinix. Naturally, you need to be a client of theirs, right? And how to be a client of theirs? You just basically need to register an account, verify your account with Zenfinix, okay, and then make a small deposit of $100, and you'll be qualified as a Zenfinix client. Okay, the $100 is not paid to me. Okay, it's not paid to Zenfinix, but the $100 is deposit into your trading account, which you can fully use it to trade. Okay, so just want to be very clear on that. And of course, if you want to find out a bit more about this, you can reach out to the support team through the WhatsApp as well. Okay, you need to RSVP if you're keen on this event as well, because the venue space, we're gonna limit it to 50 packs. Okay, so first come first serve. Obviously, once it's full, we won't be able to accommodate more participants for that particular event. Okay, so I hope everything has been clear so far. Okay, so that WhatsApp link is going to be crucial. Okay, whatever that you would like to find out more, questions about Zenfinix, question about some of these events that is sponsored by them, you need to reach out to them. Okay, question here I see from Richmond asking, will do in Penang? Yes, in March. Okay, the tentative date right now that we have, let me pull it out. Okay, tentative date that we're doing in Penang right now is gonna be on the 18th. Okay, 18th of March. Is this event as well, right? Elliott Wave Masterclass. We're gonna run it in Penang on 18th of March. Okay, tentatively that's the date. Okay, so good. Okay, that's all I have for today's session. Okay, so hopefully the aspect of what are some of the outlooks in the market can give you some insights on how to prepare yourself for the week. Okay, what are the things to look out for as well. If you're actively trading, of course, just a gentle reminder, manage your risks. Okay, very, very important. It's definitely going to be a very volatile year in 2023. Many things are shifting, so make sure you survive this year as well. Okay, I mean, if you managed to survive last year, I think this year should be okay. Okay, so good. All the best to your trading for this week, and I'll see you guys in the next session. Okay, just a reminder, next week Monday we're not gonna have it because of the Lunar New Year and Chinese New Year. Okay, we're gonna see you guys maybe the following week. Yeah. Last question I see, right before we end off, I see here, do you foresee the bear market in 2022 will continue into fourth quarter of 2023? I don't think we're gonna see a bear market this year. Okay. Now I think that 2023 is gonna be a transition into a bullish year, right? So the chart here, if you look at it from a daily time frame perspective, this is how I'm seeing it, right? There's a good chance this would probably go up a little bit, come back down a little bit, retest this low, form this little structure here, and then that's it. We're gonna start going up. Okay, obviously not 100%. This is not 100% is gonna happen, but this is my view. Okay, where again I'm seeing this as a 3-wave corrective pullback. This is probably gonna be the bottom. Unlikely. I mean, the chance of we testing the previous bottom is not that high anymore. But we're likely gonna see more upside. Okay, so that's my view. It's just when are we gonna see that upside? Is it gonna be very, very late in 22.3, or is it gonna be like early second half of it, right? I think the catalyst here is the Fed. Okay, when will the Fed pivot and start talking about cutting rates, right? So that would be that catalyst to push the equities market up. Okay, so I see here question FH says, any fundamental basis for a better 22.3? I don't call it fundamental, I call it more of a macro perspective, right? So macro angle, we look at liquidity in the market. Liquidity here, we're talking about monetary policy, money supply, right? We are obviously also looking at a little bit on the seasonality aspect, which just now I shared with you briefly the article over here. If you would like to find out a bit more on this, I usually post all this and update this. This is on Medium, right? So if you're on Medium, you can search me out. If not, you can also go over to my social media. I often share all this on my social media on Facebook and Instagram as well. Okay, so a couple of things are pointing towards potentially a good year for the equities market in 2023. Okay, the question I think is just a matter of like specifically when. Okay, and that's where I'm using technical analysis to kind of give me that time frame to guide me. Okay, so fundamental, probably, when you're asking about fundamental, I assume that the macro aspect of things can cover that too. Okay, in terms of like what I mentioned, liquidity, right? If the Fed starts to kind of fundamentally shift towards easing policy, where they start to talk about cutting rates, that's usually the case where we're going to see a rally in the equities market, right? I think case in point is you look at what happened in the COVID years of 2020. Okay, yes, we have a major move down, but the market kind of rebounded and then moved up very, very fast. And what happened back then fundamentally, or from a macro perspective, is the Fed cuts rate very, very fast. Okay, from 2 point something, immediately dropped to 0, and then they start printing a lot of money. Okay, easing policy, that drives the market up, right? So every time they do that, there's a good chance the market will rally. So if this time around they're gonna start to go towards a easing policy, then that's where the market can then also rally. Good. Okay, so I hope that kind of answer your question on it too. Yeah. So that's all from me, as I mentioned. Okay. All the best, and I'll see you guys in the next session itself. Okay. See you guys. Bye bye.